Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. You have the S&P, the NASDAQ, major indices are moving higher, despite those comments from President Trump after the bell yesterday that he could impose a 10% tariff on Apple. As well, he wants to see China open up their borders to competition. It does throw a little bit of a wrench into the mix ahead of the summit at the summit Friday. Now, we do have Fed speakers today, so keep your ear to the ground. We're not getting anything too out of the ordinary. Clarida talked about gradual hikes, but that we're close to neutral, but the data is going to be important. Ultimately, though, what we're seeing is this stock market power higher. The S&P is pushing through that first key resistance level. Watch it. We turned bullish last week. In the middle of last week, we turned outright bullish. Not saying you need to buy right there, but we said that the bottoming process was going to take place through the holiday trading week, and we're going to see the market move higher when buyers step up, and we're out of those trading hours, those holiday hours, and into back to a regular week. Those buyers are going to step up, and we're seeing exactly that. Despite those comments last night too, Apple was down 2% pre-market. It has gotten back here. It's down about less than 0.5% right now. So again, those comments are getting ignored. The markets are pushing higher. The S&P is really trying to get through that first key resistance level. We have the levels laid out on the Morning Express. Go check it out. Crude oil is regaining that 52 mark, starting that bottoming process. It's going to be all about these inventories here in the near term, and then we look to the OPEC meeting next week, and the jawboning is going to continue there. But we got to see a bigger production cut from Saudi Arabia than just that 500,000 barrels that is already, sort of priced in now that they've shown that they've hit record levels on production. But again, this inventory domestically is going to be the big thing here in the next 24 hours, so keep an eye on that. But if we get a good draw in crude, we could see a good tailwind, potentially up to $55. So keep an eye for that as well. We do not want to see a build. The build in inventories would send that market back down to $50 or lower. Now, gold is the biggest mover on the day. Options expiration. You're seeing this thing $10 from the high. We're through first key support, the 50-day moving average and the 100-day moving average right there. We're trending lower right now, with that option expiration in the crosshairs. Ultimately, though, 1,200 is where you want to be a buyer. We've talked about this over the last couple of weeks. Look for dips to being buy opportunities. You don't want to stay long on these rallies. This is not a seasonal time to see this market move and hold, which it's where you want to be trading gold, not until after December 19th. That's when we'll look to position for the longer term. Give us a call. We're here to help. We're here to talk about anything on the board. Give us a call, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.